Hey everyone, Kevin Lewis with Home Life Benchmark Titus here, and it's time for your June 2024 Fraser Valley Real Estate Market Update. Today we're diving into the latest trends and predictions for the real estate market in June 2024. Whether you're a first-time homebuyer, seasoned investor, or just curious about the market, I'm going to give you some insights into what you can expect for the coming months. Let's get started. First, let's talk about the current state of the market. In May 2024, we saw a relatively unexciting month in terms of real estate stats. Most categories came in just below the 10-year averages, with prices remaining pretty stable as inventory numbers grew to the highest they've been in almost 5 years. Sales were seasonally slow, with just 1,339 homes sold, which is only 2% higher than April 2024 and 13% fewer than May 2023. Despite new listings being down 7% compared to April, May's May 2024's 3,187 new listings were 10% higher than the 10-year average, helping to build inventory and keep the market stable. At the end of May, we had 5,999 homes available for sale, the most available in the market since September 2019. This increase in supply is crucial as it could help stabilize prices as interest rates continue to drop and more buyers return to the market. Many industry experts, including myself, have been predicting that prices will increase once the interest rates start to drop. However, this may not happen as drastically as we all expected it to over the last little bit. Inventory numbers have been steadily increasing throughout the slow market, and many sellers are actually waiting for rates to drop, hoping to sell at a higher price. If we combine those sellers with all of the sellers that have already listed their homes in the market under current conditions, hopefully that's going to be enough inventory to keep things stable over the coming months. The future of housing prices, though, is going to depend on several factors in the next little bit. Will interest rates continue to drop? If so, by how much and for how long? Will increased sales lead to more new listings? Or are buyers going to jump in en masse and completely deplete the active inventory that we've been building up, pushing us again into a heavy seller's market, driving prices up? This is all yet to be seen, and like I've just said, it's going to depend on several factors moving forward. So it's going to be key to keep an eye on those just to keep in touch with what's going on in the market and make more sense of what's going to happen in the coming months. Market activity over the next month, as well as the July 24th next rate announcement from Bank of Canada, are going to provide much more clarity on how things will likely play out into the future. But for now, it appears that the market will gradually pick up, maintaining a pretty healthy position with steady and predictable growth, which is always going to be best for everybody as predictability makes for a calmer market, less chaos, more time to make decisions. And when you're selling your house, you're still going to get good value for the sale of your home. In May 2024, 22 homes for every 100 homes listed was sold. This indicates a seller's market just on the cusp of a balanced market. Fraser Valley Real Estate Board defines anything as 12 or fewer homes out of every 100 listed selling would be considered a buyer's market. Anywhere from 12 to 20 homes selling is a balanced market, and anything above 20 homes out of every 100 listed. Yes, we have gone above 100 before. That just means we have more sales in that month than we've actually had listed. That would mean that we're in a seller's market. Of course, 21 out of 100 is much less of a seller's market than 80 out of 100 selling. But nonetheless, it's still considered a seller's market according to the Fraser Valley Real Estate Board. If we look at these ratios and in a breakdown compared to detached homes and attached homes, detached homes do continue to stay in a balanced market with just 18 out of every 100 homes selling, while condos and townhomes were in seller's market territory with 24 and 30 homes out of every 100 listed, respectively. Interestingly enough, this has actually closed the gap between detached homes and attached homes as far as the ratio goes. This is likely due to a few different factors. One may be that buyers who have been holding off on detached homes just got tired of waiting and have jumped back in the market at a quicker rate than we expected to see, making that ratio go up just a little bit month to month, where the other ones went down. But more likely, in my opinion, where this is coming from is due to the recent changes in Airbnb laws. With more crackdown on Airbnb and it being less attractive to investors to own an Airbnb unit, we're seeing more homes come on the market. Airbnbs tend to be more so into the stratas like the condos and townhomes than the detached homes, at least in total numbers. So it kind of makes sense that we're seeing more of these condos come on the market and townhouses come on the market, but the same average number of sales that we're seeing compares to detached homes. This is why the ratio of attached homes seems to be coming down, despite the fact that the difference in sales from attached to detached is staying relatively similar. There's just more attached homes to choose from than we typically see at this time of the year. Now, if you're looking to make a move happen in the near future, my main advice remains the same. The best time to make a move is when it makes sense for you. Timing the market can be nearly impossible, and if you're looking to buy and sell at the same time, everything's relative anyways. So you're getting more money for the sale of your house, but you're paying more money for the purchase of your next home. It's all relative. So make that move when it makes sense for you and your family, whether that means moving in the summertime so the kids can start their new school year in a new school. If you are looking to buy a new home, it may be a good time to enter the market before prices inevitably do increase. When that increase comes is yet to be seen, and that's counter to the point of looking to sell only. Waiting could certainly be beneficial as we are predicting prices to increase. We just don't know when that's going to happen, whether the rates continue to drop and prices skyrocket up, or like we already touched on, maybe more sellers will continue to enter the market as activity picks up, keeping those numbers balanced and keeping the prices relatively stable, meaning that waiting isn't really going to pay off until quite some time. This is all yet to be seen. And again, I can't stress it enough. The best time to make that move happen is when it makes sense for you. In summary, while interest rates have dropped, it's too soon to say definitively if this will be enough to stimulate the slow market. Keep an eye on the upcoming market activity and the next rate announcement on July 24th for a better idea of how things will unfold. As always, make informed decisions and do your due diligence before making any move. I'm always here to help with all of that and happy to be at the other side of a phone call. Thanks for tuning in. And if you found this video helpful, please give it a thumbs up or a like and subscribe to the channel for more real estate insights and news every month. Leave your questions and comments below. Send me a text, send me an email, give me a call, 604-218-5635. I love hearing from you. Until next time, happy house hunting.